What did Patrick Bet David just say would be worse than a crash? What is Goldman Sachs calling for the housing market? And of course, what is the latest new home sales data that just came out, folks? Lots of stuff going on. Let's get to the new home sales data. This is something that should have been expected if you were following the channel. What is going on with new home sales? First, last month, we did 675,000. Expectations for this month were 680,000, so there was expectation of a small increase. Well, folks, 759,000. That is a significant beat. It's about 12% or so. How can that be? How could new home sales continue to truck along? The answer lies in the fact that home builders have fat margins, and they are frankly eating margin to buy down interest rates. Folks, builders are doing that. Also, it should be pointed out, let's never forget that builders are also slowing down. So what new home builders are doing right now is they are getting rid of existing inventory by eating margin and giving 30-year money at 5.5% or 5%. But they are going to restrict. I am very concerned that we will get to the spring selling season next year, call it March, and not only will we have existing sales inventory low, we will then have new home sales low. And heaven forbid, this will follow right into Patrick Bet David, heaven forbid we lower interest rates in Q1 or Q2. If we lower interest rates and we have no inventory existing in new, I don't want to know what happens. That would be bad. To that end, Patrick Bet David, in a video that you can go find called Worse Than a Stock Market Crash. Patrick Bet David and the entire team go through an analogy by reviewing, I believe it was Venezuela, and showing how Venezuela's stock market has gone up something like 600% this year. Now, how can that be a bad thing? How could that be worse than a crash? Well, folks, here's the deal, and Patrick Bet David is absolutely right. If something goes up 600%, that is owned by a small number of elite, the rich, who benefits from a 600% rise in the stock market? The owners of stocks, obviously. Now, who are the largest owners of stock? You see how this goes. So Patrick Bet David, in his video yesterday, hopes that Jerome Powell has the cojones to hold on to rates through 2025. If you watch this channel, you know that I have been hoping for the same thing. We need to keep the mortgage rates in the high sixes. If mortgage rates fell back down to 5.99, all that would occur is demand would be unlocked and no supply. We have talked about this a lot, but let's have a refresher. We have a large majority of existing homeowners who have debt locked below 4 and below 3, that it makes no financial sense for them to move. They will live in place, not move. In order to meaningfully unlock supply, you have to get rates sub 4%, or at least to 4%. I hope that does not happen. We don't need that. We don't need owners of single-family homes in real estate to see another 50% rise. If home values go up another 50%, that is not good. That is bad. We need to hold rates here because the housing market is broken. We need time for wages to increase. We need time for the market to sort itself out. If we go on this, almost EKG-like thing where rates go up, rates come down, rates go up, rates come down. It will be not good. And we will just create a bigger separation between the haves and the have-nots. Keep rates here, keep transactions low, keep appreciation plus or minus 1%. Let's just get through the decade. We got 10 years of appreciation in 2 years. Let's just get to the other side. It is going to take some time. Again, Patrick Bet-David's video was, the title I believe is Worse Than a Stock Market Crash. It's about 20 minutes long. It's definitely worth a listen. The team did a great job. All right, how about Goldman Sachs? Goldman Sachs has released their latest forecast. They are saying, this is for housing, Goldman Sachs housing forecast. Higher for longer. Thank you, Goldman. Higher home prices. Thank you, Goldman. Depressed activity. I don't know, but I am starting to think that somebody that works at Goldman Sachs on the housing team might watch this channel, because these are all things that you and I have been talking about for quite a while. In fact, what is Goldman's 2024 expectation for home prices? 1.3%. Plus or minus 1%. Been calling that for over a year. Also, lowest sales figure since 1990s. Called it. Yep, that's where we're going. And then finally, something that is very interesting. There's a lot of folks talking about multifamily overdevelopment. Did you know that in 2024, the expectation for multifamily development crashes to 350,000 units? Folks, banks aren't lending. Projects are mothballed. There's this little finished product that's going to hit the market, will hurt some areas, but there's nothing behind it. This is going to be wild. Let's talk about some earnings real quick. We got Google, Alphabet, beat top line, beat bottom line, but their cloud revenue disappointed under expectation. Kind of the reverse at Microsoft. Beat top, beat bottom, but their cloud revenue beat. In fact, Microsoft's net income was up 27% because of cost cutting. You're going to hear more about cost cutting in these numbers, a la Snap. Snap gave you a taste of what's going on in the media and advertising business. They beat top line, they beat bottom line, but they did highlight that advertisers paused around the Israel and Hamas conflict, war. So it'll be interesting. I think Meta or Facebook reports today after hours. It'll be interesting if Meta and other media players also saw advertisers pause because, again, that will impact perhaps revenue expectations. How about Jamie Dimon? Jamie Dimon is cranky. Jamie Dimon is cranky. He went on a big, long tirade about how the Federal Reserve has been wrong, their economic indicators are wrong, they're not doing their job. And at the end of it, Jamie Dimon is trying to highlight for folks, this is like the 1970s. Lots of spending, lots of waste, oil issues, lots of things going on. So again, Jamie Dimon is saying you got to be ready for all things. What if rates go up? What if rates go down? Again, Jamie Dimon's in a cranky mood. How about the Republican Party? The Republican Party apparently yesterday selected Tom, I guess his name's Emmer, to be the next speaker. He then did a straw poll, didn't have the votes, he quit, he backed out. Now apparently there's a gentleman named Mike Johnson who has been selected, and he's going to try to see if he has the votes. Again, remember, he needs to get 217 votes. I believe there's 221 Republicans, so he can only lose 4 or 5 to get there. I don't know. We'll see if we select Mike Johnson as the Speaker of the House. Hopefully we hear today, one way or the other. Last thing, we'll talk about mortgage applications. Mortgage applications down 2% week on week, down 22% year on year. We're talking 1995 levels of activity. ARMs, folks, ARMs, be careful. Please be careful. ARMs are now up to 9.5%. Be careful, please. And then lastly, TransUnion, right? TransUnion is one of these credit karma, run your credit, give you a credit score. Shocking. They have slashed the forecast, missed expectations, slowing volumes. I don't know why people don't see this. Less home transactions, less car transactions, less credit cards. It just makes sense, right? Why they would be hurt. And then let's not forget that tomorrow is a big day for this channel. We get pending home sales, which I expect to disappoint. And we also get the first flash of Q3 GDP, which is going to be, estimate is going to be 4.1%. That is wild. 4% GDP growth in Q3 when a lot of their expectations were for, frankly, negative just a few weeks ago, or months ago. Alrighty, folks, that's what I got for you. Like, subscribe, comment. Remember, if you want to start doing the work, understanding your buy box, you can become a great real estate investor. I did a half-hour deep dive on that a couple of days ago. So check it out. And don't forget to come to the Vegas event, February 17th, 18th, $199. There's about 100 tickets left. I hope to see you there. Bye.